Keep an eye on that as the end of the first half. We're all seeing
Wings.
Beer.
Sports.
Started in 1982 by longtime friends Jim Disbrow and Scott Lowry, the two opened their very first restaurant in Columbus, Ohio. Today, the company operates 1,028 restaurants, 579 franchised, and 449 company-owned. Buffalo Wild Wings focuses on the customer experience through a diversified selection of food, extensive craft and value-based draft beer, and a wide range of sports viewing, reinforcing their brand of wings, beer, sports. Buffalo Wild Wings applies a flexible service model that caters to customers' varying needs, including takeout, dine-in at a table or bar, and quick counter service, effectively separating their product appeal to families, drinkers, or sports viewers alike. Although chicken wings and their 21 signature sauces and seasonings remain a core offering of Buffalo Wild Wings, their seasonal menu favors families and women as well, with selections such as wraps, salads, sandwiches, and other shareable plates. In addition to expansive menu, Buffalo Wild Wings also provides over 30 draft beers for their customers. With a partnership with DirecTV, Buffalo Wild Wings showcases all college and professional sports on dozens of high-definition television and projection screens. Buffalo Wild Wings emphasizes a unique game day experience through branded events such as Wing Tuesdays and Boneless Thursdays. As shown in the map, you can see the distribution of company-owned and franchised restaurants across North America. This map shows the initial international expansion of Buffalo Wild Wings with franchise agreements in the Middle East and Philippines. 56% of Buffalo Wild Wings restaurants are franchise-owned. 6% of total revenue is received from the 5% royalty of sales from franchise restaurants. In addition to market, development, and operational requirements, the initial North American franchise fee is $40,000, with a minimum of $750,000 held in liquid assets. A 20-year renewable franchise agreement is required. As Buffalo Wild Wings looks to extend globally, franchising allows Buffalo Wild Wings to leverage both its internal knowledge as well as the familiarity of local operators in a given market. This also helps to remove a portion of risk that comes along with opening in new locations, as franchisees are responsible for obtaining both financing and purchasing equipment. According to the National Chicken Council, Americans will consume approximately 13.5 billion chicken wings this year, or approximately 43 wings per person, generating a very competitive market for fast casual dining for the middle class. Competitors such as Carlson Restaurants Worldwide, who operates TGIF Fridays, Brinker International, which operates Chili's, Darden Restaurants, which operates Yard House, and Hooters of America are all well-established national or regional chains. In addition to these large market competitors, Buffalo Wild Wings must compete primarily with local sports bars and quick dining establishments that also focus on wing-based menus. What sets Buffalo Wild Wings apart from their competitors is their tailored guest experience for sports viewers, and when a consumer thinks of wings, the Buffalo Wild Wings brand comes to mind first because it's what they do best. This references the importance of brand loyalty and recognition when differentiation in the market may prove challenging. Buffalo Wild Wings revenue growth has resulted in a 25% 5-year compound annual growth rate increase to sales of $1.2 billion in 2013. In turn, net earnings have resulted in a 24% 5-year compound annual growth rate increase to $71.5 million in 2013. This is a profit margin of 5.6% for the fiscal year. In 5 years, the average weekly sales have increased 25.7% at company-owned locations and over 33% at franchise locations. Food and non-alcoholic beverages contribute to 78% of restaurant sales, with the highest sales volume being traditional and boneless wings at 20% each. Beer and alcoholic beverages account for 22% of total restaurant sales. Buffalo Wild Wings stock price is up 265% over a 5-year span, trading at $147.20 at the end of the fiscal year 2013. This is an average stock price growth of over 43% year over year for their shareholders. In addition, Buffalo Wild Wings' market capitalization is up over 300% during that same 5-year span to $2.5 billion. This places Buffalo Wild Wings in the top 50% of quick casual dining restaurants. As a North American growth strategy, Buffalo Wild Wings is committed to penetrating new markets. Currently, they have demonstrated interest in starting company-owned restaurants in existing markets while searching for franchise partners in new markets. This helps to distribute risk in new markets to the franchisee. Long term, Buffalo Wild Wings expects to operate 1,700 restaurants in the US and Canada, as well as increase total revenue 20%. Buffalo Wild Wings has focused its attention only to North American development and expansion, but there is increased momentum behind their corporate strategy to branch operations internationally. As mentioned before, the company has signed 5 franchise development agreements for restaurants in the Middle East and Philippines. Buffalo Wild Wings expects development agreements and joint ventures for international locations to remain limited to organizations that have significant experience as restaurant operators and proven financial ability to support multi-unit and multi-brand operations. The company's third growth strategy is to invest in acquiring emerging restaurant brands, which broaden their accessibility to guests through other unique and differential dining experiences. For example, in 2014, Buffalo Wild Wings made a majority investment in Rusty Taco, which specializes in fresh street-style tacos, as well as a minority investment in Pizza Rev, a custom pizzeria.
The region of Southeast Asia provides exponential growth opportunities for Buffalo Wild Wings. The company has already come to terms with franchise agreements in the Philippines, so expanding to another country in the region is very realistic. Over the past decade, we have seen the emergence of a middle class in Southeast Asia, which is precisely the target market that Buffalo Wild Wings brings into its establishments. Add to that the passionate sports fan base and a very strong demand for alcohol and chicken consumption, and you have a great environment for Buffalo Wild Wings to expand. Successful expansion for Buffalo Wild Wings will gain global exposure and brand notoriety, which will help additional plans for expansion in the future. This both increases the international market share of Buffalo Wild Wings, as well as diversifying its country risk. Since Buffalo Wild Wings already has plans to expand to the Philippines, we selected the following countries to assess additional growth opportunities: Indonesia, Malaysia, Vietnam, Thailand, Singapore.
In order to analyze the attractiveness of each market, we will review a number of quantitative and qualitative factors that are organized into 3 screens. The screening criteria will begin broadly, with each subsequent screening factor more specific measured, that are critical to Buffalo Wild Wings' target market and product offerings. Countries will be eliminated at each screening level until the most attractive market has been selected. Screen 1 is a general look into the business environment for our 5 chosen countries. The first indicator chosen is population, which is a very basic idea of a country's potential market. Knowing that Buffalo Wild Wings would only build in developed areas, we dove deeper into the population number to find out how many people dwell in urban parts. This filter took Singapore, by far the least populated country at 5.4 million, from being a non-contender to a very viable option, with 100% of its people living in a metropolitan area. Conversely, only 32% of Vietnam citizens live in a developed area, making its large population not as qualified as it seems. Next, because B-Dubs wants to enter a country with an expanding middle class, we found the growth from 2008 to 2013 for each country's targeted class segment. As a note, Indonesia's declining middle class initially seems unappealing for Buffalo Wild Wings. Yet, taking into account the country's massive population compared to our other Screen 1 nations, a large target market still remains. To get a better look at economic environments, we calculate the country's actual GDP growth from 2012 to 2013, along with a summarized observation of the growth for the past 5 years. Erratic GDP growth could be an indicator of an unstable or unpredictable economy. While all countries showed positive GDP growth from 2008 to 2013, Thailand and Singapore's erratic trends and smaller growth rates are worrisome points in this filter. For a company looking to enter a new country, the nation's political stability is a crucial consideration point since local governments play a vital role in business operations. Looking at the numbers of our 5 nations, Thailand's negative 1.6 score jumped out as a red flag. Researching more into this, we found that the nation's political framework is in turmoil, with various military coups and citizen protests since the constitution was revoked in 2007. As a result, our group unanimously decided to take Thailand out of the running for a host country due to its political uncertainty. Finally, our last indicator is ease of business, which compiles many business-related factors into a comparison rank from 1 to 189. Taking all of the indicators from our first screen into consideration, we decided to remove Thailand for its political uncertainty and Vietnam due to its low scores in urban population, middle-class growth, GDP per capita, and ease of business. The second screen with our remaining 3 countries focuses on the product market for Buffalo Wild Wings. For example, current industry conditions for a chain full-service restaurant featuring chicken and alcohol. Taking the first 4 indicators of the second screen into account, our group devised a degree of competition for each nation to help us analyze the current market conditions for Buffalo Wild Wings based on full-service chain market size, growth, and existing competitors. Malaysia, moderate, is experiencing healthy growth over time in a medium-sized chain restaurant industry with a smaller amount of competitors. We see good potential for B-dubs here. Singapore, high, is declining in chain sales and has both the largest chain percentage and existing competitors. This market seems mature and unattractive to enter unless looking to utilize a leading market strategy. We're not. Finally, Indonesia, low, has few chain competitors with a small chain presence compared to independent restaurants. This, along with sheer population size and the amount of chain sales, makes the Indonesian market quite attractive. Lastly, considering the consumption for key Buffalo Wild Wings products, it is clear Malaysians enjoy chicken and alcohol, with the country scoring the highest consumption rates for both. People in Singapore eat more chicken but drink less alcohol than those in Indonesia. Malaysia is undoubtedly passing the second filter because of its appealing full-service chain restaurant environment and citizens' love of chicken and alcohol. We're also passing Indonesia, who, with its sheer population size and low degree of chain competition, is a viable option for market entry. Eliminated from this screen is Singapore. The country's high degree of chain restaurant competition and declining market is unattractive for Buffalo Wild Wings.
In the final screen, we will evaluate the 2 remaining countries of Malaysia and Indonesia to see which country's environment Buffalo Wild Wings strategy best aligns with. Screen 3 looks at issues that are critical to Buffalo Wild Wings' success, including poultry supply security, alcohol laws and taxes, the popularity of sports, franchising regulations, and corruption. We have weighted each category based on its importance to Buffalo Wild Wings' strategy. As you can see, Malaysia scored better than Indonesia in each of the 5 Screen 3 categories. Since Malaysia and Indonesia are the last 2 countries remaining from the original group of 5 countries, Malaysia's across-the-board superiority in this final screen also means that it is the overall best choice for Buffalo Wild Wings expansion. By passing successfully through each successive screen, measuring a number of demographic, political, legal, and market-related data, Malaysia has proven to be the best match for Buffalo Wild Wings given its current business situation, international objectives, and overall strategy.